Good morning, folks. Welcome to your daily market snapshot. I'm Subhash Kumar, and here's what you need to know to start your day. First up, the FIIs have sold for over 8,293 crores, and DIIs have bought for 13,245 crores on Monday. And the net addition in options indicate a neutral to positive outlook for short term. Let's look at how the global markets performed overnight. The S&P, Nasdaq, Dow all closed negative. All three US indices gave up about 1%. Crude oil was up by 2%, and notice the S&P VIX was up by 22.64%, and this is an indication of upcoming volatility. However, this happened due to a spike in crude oil. As the Fed is constantly working to get inflation down, this is a clear concern. Like whenever crude oil goes up, the inflation goes up, which will affect the prices, and which again concerns about recession keeps coming back. So as we head into the trading day, GIFT Nifty is pointing towards 80 points gap down. So we discussed yesterday on 24,800 as support, which is clearly broken, and in spite of DIIs buying, FIIs took the market down. I've seen a lot of reports that the FIIs are shifting to China due to higher valuations in India. If you notice, it's the same FIIs who bought stocks for over 14,000 crores last week and pushed the banking stocks higher. However, the point I'm trying to make is the market goes up and down in short term, and we constantly try to build a case or reason, which in itself is highly speculative. So if the DIIs are bought 50% more than FIIs, why would they sell huge volumes in market order? This is just to ensure their positions in futures and option turns profitable, and they don't really care about valuations in short term. So unlike up till yesterday, the FIIs have hedged their index futures short by buying stocks futures. So this and their volumes in options have reduced to meager 4,000 crore. This indicates a cautious approach by the FIIs. As the results for the elections will come by today afternoon. We may see the markets rally up on the upside or even go down. Either way is possible. If the election results are in favor of BJP in Haryana, we may see a pullback on Nifty. Usually whenever the market corrects, we may see an aggressive pullback because another reason why I expect a pullback is because we are entering an extreme fear zone in the market mood index. Usually the markets bottom when the MMI touches 30. We clearly saw that the market stopped when it touched 70 last week, right? The moment it touched 70, the market dipped. So we are trending at about 33. So if the market dips another 100 points, we will end up at 30, and that's when I expect the markets to pull back. So apart from the election results, we don't have any events aligned today. This is a very critical event for the market to look at BJP to hold a sustained foothold in India. The market, this would clearly decide the market moment today, right? The results in Haryana. Jammu and Kashmir, pretty much the market has already factored that BJP may not. That would be a bonus if it happens. If BJP do get required seats to win the parliament election in Jammu and Kashmir. So market expectation, since we broke 24,800 yesterday, the support would be yesterday's low of 24,700, and the resistance would be 25k on the upside. While the market looks bleak, looking at DII support, we can look at a pullback if the election results are in BJP's favor in Haryana. On the downside, if things break down, we could see 24k if there is no pullback today. That again would take another week's time, but the doors for 24k would open. On the downside, the targets are open up to 24k, but the first support would be 24,500. So quote for the day. Trading is like dancing with hurricane. Sometimes you lead, sometimes you just hope your stop loss is wearing a parachute. So that's it for today. Be sure to check back tomorrow for more quick insights. Don't forget to like, subscribe, and hit the notification bell. Happy trading, folks. Cheers.